Let's rock and roll.
What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Daniel, and is it Matajira? Is that?
Yes, sir. You got it right. You're the first person that says it right. Matajira.
Nice. And I got some great news for you, Daniel. Today, I am joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, investors, buyers, sellers, all that kind of stuff. Now, why would I do such a silly thing, you might ask? And the answer is, if you've ever been involved, if you've ever heard of private off-market or sometimes called 506B deals, you'll find out that you need to have a documented prior substantive relationship, or else the SEC will get ants in their pants over this whole thing. So I need to find out what their core competencies are, their appetite for risk, why they're doing it, and all that kind of fun stuff. And the benefit to you is you learn how to effectively communicate on the subject of commercial real estate and understand how my guest fits into those deals. But before we start talking about deals, Daniel, do you want to say a thing or two about yourself first?
I love your energy, Dan. I gotta tell you that. I freaking love it. But yeah, well, thanks for having me. This is a really, it is chance for sure. I agree with you because we were not planning this at all. So this is, you just told me, hey, we're gonna record this. And like, all right, let's do it. So yeah, my name is Daniel Matajira. I'm actually the director of investor relations at Mailbox Money Real Estate. It's a commercial real estate firm. We actually build apartment buildings, and that's our focus. We develop these multifamily properties. We focus in South Dakota. We have experience syndicating real estate deals all over the country. We've done projects in Florida, we've done projects in Texas, we've done projects in Georgia, but our hometown is South Dakota, and this is where we have what we call our unfair advantage. So we do really well here. We really like what we're doing, and yeah, that's a little bit about our team and what we do.
Awesome. I love it. And that brings us to the 5 distinct motivations. It's the first segment in this interview series. But first, I gotta say, but wait, check your 8. Daniel, I don't know. You seem young, so you're probably fairly tech savvy. But I don't know if you can look through the camera and down there, but the user's device might have this hideous subscribe button that maybe they should do something. Okay, it's a stupid.
Yeah.
But anyways, the 5 distinct
It should probably
motivations.
click it. It should probably click it.
Exactly. Click that action. It's totally free. But the 5 distinct motivations. I've talked to a whole whack of investors, syndicators, and whatnot, and everybody has their own unique why. But I find they fit pretty neatly into these 5 different categories. And the reason why it's vital to ask is because these deals take months just even to close, and there are plenty of risks involved. So it's really important to figure out what's going to keep somebody going, even if the going gets tough. And I find they fit into these 5 pretty well. The first one, preservation of purchasing power. What does that mean? Well, there are people out there who already have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership, those profits. Now, if you're in that situation, why would you make another acquisition? Well, there are a couple reasons. One is if inflation rears its ugly head and it's eating away at the purchasing power of your cash flow, you're going to have to make another acquisitions just to keep the ball rolling. But the other time where someone in this situation is going to make an acquisition is if there's distress or an asset crash, and so you can buy at a steep discount. So that's a great reason, but it's not really where I'm at in my career. What I'm up to, and it all stems from my background in the CRM industry, which is mass emailing and taking credit card transactions online for online businesses. The issue I ran into is that when I started in 2014 working for real estate companies in the CRM and online funnels and development sector, I noticed my boss was flipping 10 houses a month, or at least doing 10 transactions a month, making way more money than the people in my circle. And somehow he was paying less tax, even less tax than me. So that made me think, how do I pivot to where I'm using my skills for deployed capital, aka equity, instead of giving it all to the tax man? But that's a little too abstract for some people, especially youngsters. Very frequently, people want to take back their schedule. They want to control their schedule. Maybe that means they want to fast track retirement, but it might just mean that they want to work fewer months per year or fewer weeks per month. And that's why they're getting involved with these deals. They want to scale back a bit, but that's not everybody. Some people are super ambitious. They want to buy their entire hometown so that they can get that generational wealth and make sure that their great grandchildren never have to hold a day job. And that's why they're hustling, and they're going to continue to hustle into their 90s, which is fantastic for any GP team. But the other group that's going to stay motivated long term, and it's not really out of ambition, it's some people have picked a sector of society. Maybe it's animals, maybe it's the environment, maybe they want to send people to space, but they have figured out that there's a financial component to making that happen. And so that's why they're making the acquisitions, so that they have that financial backing to make that really big social impact. So Daniel, as far as you're concerned, those 5 different motivations, what combination of those would you say describes you best?
I believe, from my perspective, the last one, this one, help people who need it. And I'll tell you why. I know the numbers actually. Every development that we do, the last development we did, we brought $36 million in revenue to the city and to the local economy. We brought 205 jobs out of that development. And we brought $1.5 million in extra tax revenue to the city from our last project. So not many people talk about that, right? They always think, oh, the developer who just wants to fill his pockets and make a lot of money and blah, blah, blah. But what they don't see is we actually change communities. We actually provide a lot of jobs, and we actually make the cities and the communities better. And we help the city. The city loves these projects. Some cities do, some cities don't. We prefer to work with the ones that do, because I mean it's a win-win situation. They get more tax revenue, which is more money to spend in more infrastructure in parks, roads, or helping other people. Also, we provide jobs, and we offer really good housing to people that actually need it. So definitely that last one it's huge for us. And the second one, of course, everybody likes real estate because of the wealth creation, right? And it's not just like make a quick buck here and there. I've been there. I've done sales. I've done flips. I've done rentals, all kinds of real estate. But generational wealth, that's a whole different game, right? So you get to think long term. And I joined commercial real estate because that I highly believe that's the vehicle that is going to get us there. We can create a name for ourselves, not only for 1 year, but for hundreds of years. This is what we're doing with building brand new apartment buildings. Those buildings are going to be there for 100 years, whereas a flip only lasts you 3 months, last 3 months, 4 months. So yeah, we're not just chasing a quick buck. We're actually just looking to make a change in our community and make a good amount of money for us and for our investors in the meantime.
Yeah, I love that, and it does become very transactional very quickly when you're flipping houses, and that's what I learned to look out for, especially in the trading side, because I was like, okay, well, the people who are actually doing deals all the time, why would they want to sit there and be a coach instead of just going out there and doing more flips? And it's a very important thing to keep an eye on. But the other thing to keep in mind is that there are plenty of risks involved in real estate because you're dealing with nature and people and that perfect storm right there. And it's important to really recognize that. And if you're ever involved in a 506B deal, the securities attorney who helps with the SEC filing, the exemption, to do that syndication, they'll force all of the investors to fill out a questionnaire that it has some pretty invasive questions about your finances,
Mhm.
to the point where whoever reads it will know more about your financial situation than you may know about your own parents' financial situation. But there was one question in that questionnaire that I thought, you know what? I don't think it really achieves the purpose it was intended to do, and it was the tolerance for risk assessment. So in these chance encounters, I've got my own fill in the blanks question to check that box. And here it goes. There are many popular investment asset classes, but I think blank is too risky. So Daniel, it can be inside real estate, it can be outside of real estate. All that matters is it's too risky for you to feel good investing in it. What's too risky for you?
What's too risky for me? I'll say when I don't have any control of the asset. That's too risky for me. So to me, shares, investing in hedge funds, investing in, to me, that's risky. To me, that is riskier than investing in real estate. And why is that? Because we have control over what happens in the real estate. And so I don't invest. And I'll tell you, I put my money where my mouth is. I do not own anything in the stock market. I don't know. I don't have any retirement plans with them. I don't have 401ks. I don't have any of that. All I have is equity and a bunch of investments in real estate, and that's all I do. And a lot of people think that I should be diversifying and stuff like that, but hey, I have really good results with what we do. And I think when you know what you're doing, it eliminates a lot of the risk. And when you know that the partners, the people that you are partnering up with, know what they're doing and have the experience and track record, that eliminates a lot of risk. So yeah, that to me is like, if you don't have any control, then I think it's too risky.
Right. You definitely need to mitigate that risk, make sure
Yeah.
that it's within certain ranges or whatever. And, real estate's fantastic because,
Mhm.
it puts a roof over your head, and usually roofs over your head and food in your belly are the most reliable forms of investment. And that's a great time to mention the subscribe sandwich right there. It looks absolutely delicious. I
I
use
got so
that.
distracted by it. That's
Right,
why.
exactly. Yeah, it just kills me every time. But that's what tells me it's time to bring out the Dan Does Deals Commercial Core Competency Cube. And you can get your own copy of this. It has the 6 different roles in a commercial deal. You can get your own copy for free at dandoesdeals.com. And like a complete dummy, I don't even ask for your contact information, which is like the cardinal sin of marketing. You should never give away your freebie with your contact information. But the point is, I want you to go there. I want you to print this out. I want you to practice getting used to these 6 sides, because I mentioned earlier that learning how to effectively communicate on the subject of a commercial real estate deal, it's important. But the reason why it's important is because I don't think you're going to be able to get anywhere in this industry unless you can explain where you fit in. And the other benefit is that as I go through the 6 sides in every episode, it just takes a couple minutes, you'll be able to understand how my guest fits into those deals. So let's get started.
All right.
Repositioners are the first people I want to talk about because they're in the job of acquisitions. They're
Mm.
looking at a bunch of different properties. They're doing a bunch of paperwork. The fancy word for what they're doing with the paperwork is called underwriting. That means they're doing the math, they're doing the arithmetic. They're figuring out, first of all, is this property even making the amount of money that the seller slash broker claims it is?
Yep.
Because and so the repositioner, the reason why they're doing that math though, is they're figuring out how can they find some upside? How can they make this property make more money than it is right now? And one of the most counterintuitive, unintuitive, I suppose is a better word, parts of a repositioner's job is investor relations, interacting with financiers. Financiers are people who only deal with paper and money. They do not have any real role in the operation of the business. They're not GPs. They may be LPs. They may just be strict lenders, something like that. But the reason why every repositioner has to have an extensive network of financiers is because if you can secure more advantageous lending, then that goes straight to the profitability of the building. In other words, if it's a cheaper loan, you're making more money. So that's why they need to know lots and lots of financiers. But the more obvious part of a repositioner's job to find more upside is to have more efficient operations, stopping those Benjamins from going down that toilet there. But of course, there's a lot more to operations than just unclogging toilets and collecting rents and mowing lawns and that sort of thing. a couple of the things that I do to contribute to operations. One is the programming and automation, but the other one too, that this comes in even if you're talking about, 100 units and more, those bigger properties where you're outsourcing your property management. What can happen is sometimes you can have a vacancy rate problem and you need to fill those units and they just can't really get it together. The fix for that is having somebody with some serious marketing chops to fix that up. And so that's what I'm contributing for the most part. But the repositioner often needs to find way more upside than just optimizing those operations. So they'll get a contractor team involved to do value adds. They'll upgrade the apartment units. And the idea being that the next resident will be more than happy to pay more in rent than the previous one. So that's some baked in upside. But you can spend unlimited amounts of cash on contractors and upgrades, and that doesn't mean that you're going to get a positive return on the investment. And the ways that you can stop that, especially if you're like me, I don't know if you know this about me, but I'm from the internet. So I need somebody who's a local, who lives nearby, who can be there in an hour or two. This person can be there in an hour or two, because that categorically will not be me. I'd still be stuck at an airport in an hour or two if I had to get there. But the local will end up keeping an eye on the contractor team, making sure they're not using substandard materials, make sure they're not dragging the dates along. And also they'll be keeping an eye on the operations team to make sure that they're not cutting corners. But when the repositioner has assembled this team and they've got a property in mind, they'll turn around to the financiers and they'll say, hey, I got this building. Let's say it's 350 units. Let's say it's tens of millions of dollars. And they'll say, do you have, I don't know, tens of millions of dollars you want to lend us? And the financier is going to have one burning question that I haven't mentioned yet. And a lot of coaches and gurus, they really gloss over this part. So this is the part you want to listen carefully to. They're going to ask, who's the sponsor? Who's the KP? What's that all about? Well, let's do a hypothetical to illustrate. So let's say you're a physician or an attorney or an engineer, something like that, and you and your pals want to take your 50K, 100K units to do the down payment and take over a commercial property. Well, the snag you're going to run into is that you're not going to be eligible for a commercial loan unless somebody in the fold already owns a similar asset. So that means if you want to take over a 350 unit apartment complex, you need to find somebody who already owns a 350 unit apartment complex, and they call them a sponsor or a KP. On top of that, the team will need to put together a certain amount of liquidity, and they'll also have to have a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Daniel, your team, it sounds like you've been at it for a while, so I'm sure you got some repositioner sides. You might be a sponsor as well. You have to have some sort of asset management involved. You're also building the actual apartment building. So it sounds like your company checks a few of the boxes, but I don't want to put words in your mouth. Where do you see you guys fitting in on those deals?
All right. So speaking from a company perspective, I love, first of all, I love the way you described it, because a lot of people don't understand that, right? And there's a lot of different strengths and there's a lot of different roles. So I guess that's the beauty of real estate and commercial real estate specifically, that you can actually partner up with people who has those strengths. So in our team, we every time we develop properties, we have one person that is in charge of the operations, who is a master of operations. We also have one of our partners is the general contractor, and he's the builder. So he is a master of building and doing all those tasks that have to do with construction. Which, if you're in real estate, you're gonna know bigger risk is usually in the construction part. If you have that figured out, the odds of being a successful deal are very high. And on the other side, I mean, you also need the rest of the team. I mean, you need the financier. You need somebody that provides the equity, somebody that provides the track record, some people that provides the finances. I mean, everything that you mentioned is spot on, man. And I would say we've been working, for the last 4 years. We've been doing all these projects together with the rest of the team so that we can fill all those positions. And me personally, I'll say I'm more of the financier side, because I help providing the equity for all these projects. I help, it's a full-time job. I get it. It's not like we're raising a couple $100,000. I mean, we're doing we get a raise in $6-7 million every time we do a new development. So it is a full-time job. And but then on top of that, we also focus on, how do we add value to these projects? How do we add value to the investors? And how do we make this a relationship-based business? Because that's, at the end of the day, that's what it is. If you do well for these investors and for these people, you're gonna do really, really well on your own. So sorry, it's a little long of an answer, but does that kind of answer the question?
Oh yeah, definitely, definitely. And it actually brings us straight into the next question, which is the buy box. And when investors, syndicators, people in this space are asking, what's your buy box? What are you looking for? We're really asking about three things. First one's geography. Where is it? So which states, which counties, possibly even which neighborhood. It's all going to matter before you call it ideal. The second one is going to be the deal size. And the way that we define size in multifamily, which is apartment complex investing, it's by unit count. And the reason for that is because you're going to have a completely different type of team that takes over 10 unit apartment complexes compared to the 150, 350, and so on apartment complexes. So that size definitely matters. Now, in other forms of commercial real estate, it'll go off of square footage. But on this show, most of my guests are in multifamily. But the third thing is called class. And one of the problems with that term is they have two different parts to it that are really completely different, unless you call it desirability. So I separate it into the words condition and area. So if you're talking about condition, that has to do with how old is the building, how beat up is the building, and then of course, as far as like luxuries and amenities, is it kind of, bare bones, or is it full of, like gyms and wonderful facilities that make it a nicer place to live? So that's the condition. Now, the area, on the other hand, that's talking about what are the school districts like where the property is located? What's the crime rate like where the property is located? And then the last one, the old trope of location, location, location. What it actually means is traffic, traffic, traffic. That means how many people will pass by that property on a given day, because if it's a lot, then the desirability will be a lot higher and the value therefore as well. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top, and then A, and then A minus, and then B plus, and so on. So Daniel, as far as you guys go, again, you develop, so that changes it a little bit. You might be going from raw land rather than an upgrade, but what's easier for you guys to say yes to?
Yeah, so we actually, funny you mentioned that, we actually have a very specific buy box. So we develop Class A properties, also, Class A properties or Class B properties, B plus plus, because everything we build is nowadays with interest rate changes. I mean, we had to kind of adjust our construction style, but also by doing that, we actually found that our Class B plus properties are easier to build, and we can locate them and actually fulfill the demand. The biggest demand we have right now in the whole country, where we are in the whole country, is workforce housing. So we are actually fulfilling that demand. So we want suburban neighborhoods where we can build Class B plus properties, garden style properties, very modern looking, very nice. We stripped all the amenities because that's what cost a lot from building and making it a class A property. But we offer super nice interior, super nice units, super nice buildings. Everybody who lives there is very proud to be there. And a huge benefit is they actually get to pay a little bit less in rent because they don't have to pay for extra amenities that probably they don't even use. Right. So we specialized building these properties in South Dakota because that's our market. That's where we have our unfair advantage. We specifically in Sioux Falls, South Dakota. We go looking for suburban areas that are on the path of growth. That's what we're looking for. And unit size, I'll say we don't build unless it's at least 120 units, because that's kind of the breaking point that it just tells us if the property makes sense or not. And usually we go above 120 units, but at least that's the number. And what was the last question? What was location?
Yes,
Oh,
yeah,
traffic? Was that
yeah,
traffic
size.
count?
Yeah. You covered that, and then yeah, and you covered the geography. So you checked them all.
Oh,
So that's
yeah.
fantastic.
Okay, perfect.
Right. So the next question, though, it has to do with ideal people for to reach out to you. And actually, Daniel, you said it perfectly about how the beauty of this industry is that because nobody is going to be all six of those roles for any meaningful amount of time, it is a team sport. You have to collaborate, and it means that as an industry, we're really eager to give more referrals and help build new teams, but at the same time, because we have our own unique skill sets, we're better suited to help some people more than others. Me personally, because of my experience in the tech side and the mass marketing, the sponsors and KPs are the people who I'm always eager to speak to because they've got a foundation in place where a person like me will make a disproportionately large difference. Whereas when you're first starting off as a repositioner, you need grunts. You need somebody who will put in 80 hours a week, just calling and calling and calling, smiling and dialing, as they say. And so there's not a whole lot of room for a guy like me. So it's the sponsors, and then of course, because I'm from the internet, the boots on the ground, I'm also very eager to talk to them as well. But Daniel, as far as you're concerned, you mentioned that you generally do 506C deals, so that's great. You could talk about a specific deal if you really want to, and entice investors, and that's totally clear. But as far as who's out there in the audience where you can help them a disproportionately large amount, who are you looking for?
We always look for two people. We always, the best way to bring value to us is even, bringing equity or bringing a deal. And a deal to us could be a piece of land where we are located, or equity. It's like, hey, we build fantastic properties. Our projects are usually overperforming. We're very conservative with our things, so we have a very experienced team that people feel usually very comfortable investing with. So if you're looking to play some equity, that we can also discuss that. But yeah, that's pretty much it. I mean, everything else seems like we have it pretty much covered. Our teams, we've been working hard to get all those bases covered. I'm not gonna say we're perfect because we every day we gotta learn, right? And especially if you're looking to scale and build more. I mean, now the market's a little more challenging, so we gotta adjust, do a lot of tweaks here and there. But yeah, that's pretty much what who we're looking for.
Perfect, perfect. And then the next question would be how to reach out. And me, I got this distinct last name. It makes it really easy to find me on LinkedIn, which is where I spend most of my time. After all, I've got a badge that says I'm a top commercial real estate voice on LinkedIn. So, and if they
Hey,
say
you
this,
have the yeah, you have the radio voice, so it gives you a
that's
lot
funny.
of credibility there. So I love it.
Awesome, awesome. But if you scan this QR code with your phone, that brings you to the FAQs page of 506 Me, which is the platform where I offer the service from my CRM background in IT, where I will help you document your substantive relations for your investors. And that's important because once you get to a certain number of assets under management, the SEC will audit you. And the thing that they're looking for is you need to have that proof that you actually knew your investors before you started pitching them your 506B deals. And so that is how I support people. But Daniel, if people want to reach out to you, is like social media channel, phone number, website, what are the best ways to reach out?
Yeah, so the name of our group is called Mailbox Money Real Estate. So that's probably gonna be hard for you to forget. Mailbox Money Real Estate. So go online, mailboxmoneyre.com, or you can just email me, Daniel@mailboxmoneyre.com. And that's pretty much the best way to find me.
Excellent, excellent. So the only thing left then, it's actually not for you, Daniel, it's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing like searing pains in your eyeballs and like migraine-like symptoms, it's probably the hideous subscribe button that's down there. And it's don't look directly at it, but you can click on it for free. And of course, I want people to click on it because if enough people click on it, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. The trade-off for you, again, it's totally free, but it means that my videos may show up on your list of suggestions. as far as I'm concerned, you can go ahead and ignore those suggestions. It's perfectly fine. I just appreciate the fact that you spent this time with me. Just like Daniel, I appreciate you joining me today. This has been
Yeah,
really great.
thanks for having me, man. What a chance.
Right, exactly. It's a total coincidence, lightning strike.
Yes.
Right.
It is, yeah. Well, this
Awesome.
has been awesome. Thank you, Dan. I appreciate your help, man.
My pleasure. All right, awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.